Okay, let's dive right into this. We're going to talk about a really powerful strategy for understanding why the market moves the way it does. It's a method that completely shifts your focus from just predicting prices to actually reading human psychology on the charts. You know, it's the big question, isn't it? The one that drives traders crazy. Why do so many people lose? Well, the answer might not be what you think. It's not about finding some magic indicator. It's about understanding who is on the other side of your trade. This right here, this quote, is the absolute foundation for everything we're about to talk about. Once you really let this sink in, you'll stop seeing charts as just random squiggly lines. You'll start to see them for what they really are, a story of human hope, fear, and, most importantly for us, stress. So let's totally reframe our goal here. We're not trying to guess what some abstract price is going to do next. No. We are learning to read the behavior of other people, right there on the chart in front of us. Think about it for a second. When people are calm and collected, their actions can be all over the place. But when they're under pressure, when they're stressed out, that's when their decisions become, well, they become very, very predictable. And that predictability, that's where we find our edge. So here's the core of it all. We are actively looking for opportunities that are created by other traders' panic. We're on the hunt for those specific moments where a group of traders suddenly realizes they've made a huge mistake. And listen, we have all been this person. You jump into what looks like a perfect trade, and boom, it immediately reverses on you. You're just sitting there, holding on, hoping it'll come back, but the panic is building. Well, the forced exit of that trapped trader is what creates a powerful surge of orders that we can actually ride. This strategy turns that awful feeling into a calculated opportunity. Okay, now look at this chart. This visualizes that conflict perfectly. You see that third push down? It breaks that previous low, and that sucks in a ton of traders who think, aha, a reversal. But when the price snaps back up, they are instantly trapped. Their panicked exits are what helps fuel the real move up. That right there is the trapped trader in action. All right, so how does this idea actually look on a chart? Well, it all builds into 5 specific, repeatable patterns we can hunt for. You can think of these as the footprints left behind by those trapped traders. Every single one of these setups represents a unique psychological battle. They're not just patterns on a screen. They're signals that a high-stress, predictable moment for other traders is probably unfolding right now. And this right here illustrates the psychology perfectly. Over on the left, the breakout failure, or BOF. It punishes all the impatient traders who jump the gun. Then on the right, the breakout pullback, the BPB, rewards the disciplined traders who wait for confirmation. See? Both setups are driven by the actions of that same group of breakout traders. So being able to spot one of these setups, that's just half the battle. Executing the trade with real, solid discipline, that's what separates the pros from everyone else. And pay close attention to the order here. It is absolutely not random. This strategy demands that you first know where you're wrong, that's your stop, and then where you're going, that's your target, before you even think about hitting that buy or sell button. It takes the emotion right out of the decision. This is such a critical shift in your mindset. A stop loss isn't just some point of financial pain. It's a tool that validates your idea. If the price hits your stop, it means your entire reason for being in the trade is now gone. It means you don't even want to be in that trade anymore. The goal is always to get in at a wholesale price. What does that mean? It means getting in early with the pros, before the move is obvious to the rest of the crowd. The retail trader usually chases the market because of FOMO, fear of missing out, and they get a terrible price, take on way more risk, and end up with less reward. We want to do the exact opposite of that. Now, it's really important to understand this is not some rigid set-it-and-forget-it system. Not at all. This is a dynamic framework. Your job is not done once you enter the trade. The whole reason the setup appeared in the first place, that market sentiment, those trapped traders, it can all just evaporate in an instant. As a discretionary trader, your most important job is to keep reading the price action, bar by bar, and be ready to adjust as the story on the chart changes. This quote is everything when it comes to active management. It's so simple but so powerful. You don't get out of a trade just because you hit a profit target or because your stop is getting close. You get out because your original reason for getting in the trade is no longer true. It forces you to stay locked in and objective. So if you're going to take away one thing from all of this, let it be this: You are not trading lines on a screen. You are trading the predictable emotional reactions of other human beings. Your profit is literally coming from their mistakes. Ultimately, this whole approach just transforms a chart from a bunch of data points into this compelling, real-time story of human fear and greed. And once you learn how to read that story, you will never, ever look at the markets the same way again.